Hello everyone and welcome back. My name is Greg Furman and these are the market positions for July the 7th, 2017. Now our first position for tonight is going to be in the Forex market. What we're looking at is the Euro-Australian pair. Now, first thing I want to point out is we have a fresh triple EMA cross from VantagePoint, about 3 days old. We've got our neural index moving higher multiple days in a row, our predicted short, medium, and long-term differences along with our strength indicator all firmly above the zero line and pointing higher. Now, the position of the predicted MACD is very interesting as we're just crossing over that zero line, and we have good momentum building with the predicted RSI. Now, again, looking at that predicted RSI, we're using a 60-40 split here. A break of the 60 is very bullish, and a break of the 40 is very bearish. So when we look at all this, we combine our VantagePoint indicators. Our final check here, we want to look at those individual crossovers. So when we look at our short term, everything looks good. Our medium term looks great. And our long term crossover also looks very good. Now you'll also notice that I've drawn in our trend line resistance. That too is broken. We've come into a very tight wedge formation here. And again, we continue to advance and we're closing above that trend line. So the downside here, guys, we do have the non-farm payrolls tomorrow. That could be a very big negative for the euro, or it could be a very big positive. But either way, the euro seems to be a little stronger than the Aussie currency at the current time. Part of that is from the RBA announcement on interest rates, but still we can see that prior to the RBA this week, VantagePoint was still forecasting this pair to go higher. So with the close today of 150.51, we're looking for a relatively minor pullback to 149.87. We're then going to target 151.50. Now, again, if we can get moving here, I believe we can hit the 152 mark, potentially even higher in the days and weeks ahead. So not only a very good short-term position, but potentially a very good medium and longer-term trade also. Now, that's our first trade for tonight. Our second trade for tonight is going to be in the short, ultra-short market in the ETF sector. Now, what we're looking at is the ProShares Short S&P 500, the SH. Now, in this particular ETF, we're looking at basically betting that the stocks are going to go lower. So as the SH goes higher, we're looking for the S&P 500 to move lower. Now, a number of indicators, especially on the intermarket analysis side of things, are pointing towards stocks being coming into a period of potential weakness. It may be corrective in nature, or it could be potentially a trend reversal on these stocks. Now, we do have a fresh triple EMA cross from VantagePoint, only 2 days old. We've got our neural index going from a 0 to a 1. Our predicted short, medium, and long-term differences and our strength indicator are just above the zero line at trend-ready levels. Now, the position of the predicted RSI is in very good shape at 69.2. And again, we're looking for momentum to build here on this based around that RSI, which is a predicted RSI, excuse me, which is a leading indicator. Now, our predicted MACD, we had a crossover several weeks ago, but we're still below the zero line. Now, a break of this zero line is going to trigger a much bigger move. Now, much like with all of this, bringing all this together, I always look for a needle in a haystack. You can see I've connected our trend lines to our current swing highs, and we do have a trend line break, a close above this, not by much, but just enough that I think we're going to build momentum here. The critical VantagePoint level, 33.45, we're closing at 33.67, above all three of the VantagePoint predicted moving averages, but the main one we're looking at, of course, is that predicted 18-day moving average. So once again, one of our final steps here that we want to look at is bringing in those individual crossovers. Our short term is pointing higher, our medium term looks good, and our long term looks quite good. So with all three of our predicted moving averages crossing up to the upside, plus we have that triple EMA cross only 1 or 2 days old, it's suggesting, based around the correlation to 30 other markets, that the S&P 500 is probably moving lower. So all we have to do here, guys, our final step, never our first step, we go to our all-important daily report. We're closing at 33.67, so for tomorrow we're looking for a minor pullback here to 33.50. We're then going to target 34.01 on an intraday basis only. Now, if this can get moving, we should be able to see a move back up towards $34.50 or even $35 per share, because again, these equities, in my respectful opinion, are somewhat overvalued. But again, nothing goes straight up and nothing goes straight down. So we're looking to capitalize on that opportunity. Now, again, in my respectful opinion, all stops should be below $33 per share here, guys. We have to get through the non-farm payroll tomorrow, and we have to give this trade a chance to develop.